Hi everyone. Good afternoon to one and all. Welcome to our virtual conference Digital Money. Payment Council of India and Lyra presents Digital Money 2020 powered by PhonePe. Let us start a panel discussion on creating a landscape for micro lending in India. I'll start by introducing our moderator for the session, Senior Vice President and Chief Executive Officer, Lending Paytm. Welcome, sir. It's a pleasure to have you here.
Thank you.
Panelists for the session, Mr. Shachindra Nath, Chairman, UGRO Capital. Welcome, sir.
Thank you.
Chandani, Managing Director and CEO, CRIF, High Mark Credit Information Services. Welcome, sir.
Good afternoon and thank you.
Mr. Arindam, DMI Consumer Credit. Welcome, sir. Mr.
Good
Harshit
afternoon.
Desai, Head Customer Experience, Automation and Alliances, Aditya Birla Finance. I welcome all of you. Before I hand over the conversation to Mr. Gupta, I'm requesting the audience to kindly put in their questions in the chat box, and the panel will address a selected few at the end of the session. Thank you. Over to you, sir.
Thank you. And good afternoon to all the listeners. I'm hopeful that you will find the next 45 minutes very interesting. And we look forward to your questions because there's a very interesting subject that has been picked up and very close to me personally and to my fellow panelists also, because we were chatting before this session began that this is one of the areas in India which has not necessarily been tapped appropriately over the last, maybe you can say 10 to 15 years. Whereas the micro lending as an opportunity, if you look at globally, especially in China, has really, really blossomed back of digital payments, back of technology, and a lot of role that we see have got played, the way the regulators have really come and supported small ticket lending or micro lending. Today, the idea of this session is to explore the landscape from the eyes of very different stakeholders and who are very important part of the ecosystem as to what they believe is their view about microlending opportunity in India and how they see this opportunity play out over the next maybe 2 to 3 years or maybe a longer period of time. What are the key challenges and what are the key opportunities which needs to be leveraged upon to really build this opportunity to a much bigger opportunity than what we see today? Just from my perspective, the way I've seen microlending emerge, and especially from where I come from, which is Paytm, which is very, very aggressively pursuing the agenda of looking at small business credit and micro credit through pay later products and small business lending. This is an area which is just at the cusp of a significant boom. The entire Paytm and the payment ecosystem that we've seen has further amplified this opportunity. But having said that, areas of how you give experience, areas of how you use alternative data, areas of how do you educate customers, especially in tier 2, tier 3 markets where a lot of microlending customers reside in small businesses. And above all, how do you underwrite, how do you collect, continue to be the key challenges, which is kind of somewhere becoming an impediment in the scale up and the growth. I would now open the panel and I'll request a very, very senior colleague and somebody who's really done this business, seen this business from the lens of small businesses in his past life and his current avatar as a founder and promoter of UGRO, Mr. Shachindra Nath. I would look to Shachindra to give his view as an opening comment as to how he sees what's been happening in microlending and how he sees this opportunity pivoting. Shachindra, all to you.
Thank you, Bhavesh. Yes, it's right. It's very interesting because in 2015, when my professional career ended, and which included almost building financial services across every domain, and micro lending business was a small part of that. But I was to an extent I was tired of this high street investment banking, big asset management, private equity businesses, and I remembered my origin. I belong to Banaras, and the first 10 years of my career, I was into rural markets wherein I used to manage carpet business actually. And when I thought of this from the lens of an entrepreneur, and I said that why it is that in a market wherein 30% of the GDP is contributed by small businesses, wherein why it is that every time a lender is unable to lend, It is a different thing when I become lender. I also find it difficult to lend. But the macro being so strong, it is very intriguing to not understand why this credit gap every year is expanding rather than getting fulfilled. While there is so much of noise and everything is happening, and I came to this simple conclusion that mainline lending institutions look at every small borrower, right, from the same lens. I give this example every time that you think of a big bank's credit officer going to a dentist and then going to an IVF clinic. And he has been trained for 30 years that, doctor is a doctor. And these are the questions you should ask the doctor. Sir, how many OPD patient come to you? And if he gets this answer that, I have 50 OPD patient, the doctor is a good doctor. And if he get the answer that I have only one OPD patient, it's a bad doctor. Because it doesn't come to his mind that in IVF clinic, one patient is equal to 500 patient of a dentist. And there is no solution to that. So obviously, I got inspired that there has to be a method of solving that. And there is many ways which we can do it. So I think so digitization is one single way through which we can do it. But I talked about that when I became lender, it became very immensely challenging. And it became immensely challenging because, especially if you're not a bank, if you're a non-bank finance, you also have to manage three ecosystem, right? So, for consumer businesses, no, for a Flipkart or Amazon, you have supply side and you have a consumer, and your only thing what you have to worry about is consumer experience and repeat. The consumer should come on a repeat basis to you. In lending, actually, even if you create that extremely well, at the back end, your provider, the goods and services is the only capital, and that comes from a very different sets of people. It come basis ratings, it come basis what is the bank's perception and the liability side perception of you. Unfortunately, microcredit or micro lending is stamped as something which is risky, something which is not good, something which can bust the portfolio. And obviously, it is fact that some of the new generation players have actually showed a very poor performance, which means that if you create a portfolio which is just on micro lending, in spite of everything else you do, your liability side get immediately constrained. So in spite of knowing what we should be doing, sometimes we get constrained from that factor, and that's why you have to build business in more conventional way to begin with. So that I think so is the challenge, but it's not. I think so given that some of the things which are happening into the market, and you would realize is that the way the payment industry has got transformed in last decade or so, my view is that the microcredit would also get transformed in next 4 to 5 years, wherein some of the new innovation which is happening would take away from the conventional way of looking the credit, and then it would become purely the how robust and how widespread distribution is. And within the microcredit there are multiple variants of that: micro consumer credit, micro small business credit, which we are very focused on. But then you have to build a very solid robust distribution and figure out a way of using deep data analytics and data analytics also for new to credit, so that you can underwrite the customer. Two things I think which will transform microcredit, and for that actually microcredit customer also have to be self-enable themselves. One is the banking data, second is GST. For every borrower which is GST enabled, if you use GST data and analyze that well, the ability to lend to any microcredit customer combining that with banking is immense. We are, I think so, only have touched only 1% of that data analytics which can be utilized. So we are doing a little bit of that. I think so. We are only 5% in what is my inspired journey would be, but it's an everyday effort, and that's why we keep doing that.
Wonderful. Arindam, if I ask you from your perspective to give an overview, because you are somebody as DMI chief executive who has been, I would say, by large, one of the most forefront players of assisting microcredit through fintech partners, etc. How do you see this, and how do you see the evolution post-COVID?
Thank you, Bhavesh. And thanks to Digital Money team for hosting this very interesting platform today. Thanks to my fellow panelists. What Shachindra brought a very interesting point about how the requirements were always there since last many decades, but the formats, the data points, usage of data has enabled this piece. And I would like to talk more from what Bhavesh mentioned about micro lending in the consumer side and the personal side. So think about, we would encourage everybody to think about it from a bite-size loans, where the requirements are in the consumption side, not necessarily few lakh rupees of loans. It can also mean that I have a requirement today to purchase something from an e-commerce site or something from an online aggregator side for something as worth 5,000 rupees or 500 rupees. Of course, it is possible to give a loan of 500 rupees and 5,000 rupees and 10,000 rupees. Everybody has been doing it for decades. But the challenge is to do that was the customer journey was extremely broken. Why? Because it took probably few hours or few days to make it happen. And by the time the customer either was tired or probably he never wanted it and he paid it through his debit card, credit card, and now thankfully through his wallet and other means. So what did certain micro lending institution, the fintech players, the people who have built the digital ecosystem, what role they played? What they did is they got a system or the stack together, which allowed the KYC to be done in few minutes, the data to be fetched from my fellow panelist like Navin Chandani's organization within few seconds, from alternate data perspective, like Bhavesh's organization like Paytm, draw some alternate information, and within seconds, now create the ability for customer that yes, 5,000 rupees can now be taken. The payment can happen from a bank or a lender or a NBFC, and the EMIs can be paid in 30 days or 60 days or 90 days, and if he wants, can be 180 days. And setting up the standing instruction also in a manner which is happening in seconds and minutes. So within 5, 7, 8 minutes, the journey is done. The customer has received the services or the goods and he walks away. The micro lending piece now has become much easier than how it was earlier. So it has resulted in two things. One, it has expanded the pie, right? And the second is it has created a new pie. It has expanded the pie because now suddenly, I was not even thinking of taking the loan on a 5,000 rupees product. Or there was a, just before this discussion, we were talking, in fact, Shachindra gave the example that when I go to an IVF clinic, maybe the treatment cost 3-4 lakhs versus a dental procedure, which is costing 10,000 rupees. So it is not about 10,000 versus 3 lakh. Question is, can I do for both equally well within that, whatever, 1 minute and 2 minutes? So that expanded the pie. The second is, it created also a new pie. Certain segment of customers were not even included in this journey, either on the financial inclusion side or on the totally on the opposite side, which is mass affluent and private, banking style affluent customers. Now they find it extremely easy to purchase a iPhone 12, which I've been told that it is like almost a lakh rupees, right, for price. Now those guys who are buying a 1 lakh rupees phone, I'm sure they are not looking for a loan all the time, right? They just take the loan because it is convenient, because Apple and whoever is supporting Apple from a lending institution is making it so easy, so smooth, and so seamless that the customer has to press few buttons and he can go through it. So this created the new pie. So between the expanding the pie and the new pie, this opportunity is humongous, right? For example, like let's talk about the Amazon and Flipkart, the big billion day sales and the festive season they saw, which continued till large part of November. What we saw, the numbers were in billions of dollars. Now, of course, none of us, as in none of the lenders all put together, would have catered to more than 30 to 40% of that requirement through finance or EMI or credit card. 60% or 70% would have happened through new age wallets, right? New age payment gateway companies, because cash on delivery technically is almost like zero these days because of thanks to COVID. So what is happening is a new age payment company like a wallet company and a payment gateway company is suddenly also figuring it out that I can also enable this XYZ customer and offer him a credit because I know he's been buying from Flipkart for the last 12, 18, 24 months, or I have been using Paytm wallet for the last 24 months. That data set is so rich, and it is suddenly making certain things possible which earlier was not even possible, because the earlier metrics to understand somebody was bank statement and bureau, right? So this opens up a new vista which probably we had not seen. So my answer to that is these two things. And yes, I think it is an extremely progressive times.
No, so I think Arindam, you hit the nail on the head. The one of the impediments that has been is the cost of underwriting this credit, and if you have to manually go check to underwrite, it's just prohibitive for a traditional lender to really be making some money in a 2,000 rupee credit, and that's been also been a challenge that I don't think the industry has really found answers to, and I would hence take this question to Navin from his perspective at the credit bureau. Navin, tell me, how do you see, because you must be seeing a very significantly high first-time users of such micro-lending products come and hit the bureau for the first time, right? Do you see this opportunity something which is just being talked about from a bureau perspective, or are you seeing this opportunity really play out? And what is the role that you are seeing from your perspective as somebody who's running India's second largest bureau in really augmenting or scaling this opportunity for India? I mean, unfortunately, we can't hear you. Sorry.
Thanks, Bhavesh. Good afternoon to everyone. Bhavesh, I will try to answer this question, by giving some data points so that I bring it under context. I think Shachindra as well as Arindam both touched on two aspects: the consumer and the small business, right? Micro lending actually has one more component, which is actually the microfinance, which is joint borrowing. Now, we are actually three components. Let's focus only on the small business, which is an MSME or an owner, proprietor, director who takes it in his capacity, and an individual. So actually, that's the lay of the land. And I think Arindam touched upon it, and I will just reword exactly what he said. From a need-based borrowing, a convenience-based borrowing is coming in because of the digital savvy group. We know that there are approximately 50 million credit cards. There are around 500 million debit cards. Now, debit cards and wallets, along with credit cards, are being used today to do online purchases. Only the credit card people were getting that credit, which was convenience-based. I think buy now, pay later products, which Arindam kind of touched on, is becoming very good for the digital savvy urban population. But it is even the semi-urban educated that are actually utilizing digital forms of payments. Even small businesses have started utilizing that. In fact, if I take small ticket loans from a personal loan perspective, believe it or not, I was just seeing the data when I was hearing the conversation. From 12% of small ticket loans, I would call less than 50,000 rupees of the overall PL in volumes, has grown this year to around 49%. So small ticket loans in volumes is growing. In value terms, yet the big boys obviously take a bigger loan, and that is a bigger chunk. NBFCs and fintechs have played a very, very important role in making this small ticket loan in volumes grow, right? Important, again, there was a 5,000 rupees mentioned by Arindam, so I very quickly looked at the data. Out of the less than 50,000, the 5,000 has grown from 27% to 50%, right? And Arindam touched upon mobile phones. I was just talking about personal loan. That is the consumer durable loan. Now, the consumer durable loan, anything less than 50,000, approximately 96% of all transactions are less than 50,000 on consumer durables. Now, who has enabled again consumer durables has been the NBFCs. Yet, private banks are doing a lot at the top end. It is at this, and to your question, the new to credit. I think, exactly what my co-panelists mentioned and you mentioned in your opening, two or three things are coming together. The first is that I think digitally, we can, with different services like bureaus provide, give you real-time information where there is a bureau footprint. Second is the use of anti-fraud solutions to know that we are talking to the right person because it's digital. It is not a face-to-face evaluation that is available. And then most importantly, over and above income data, which is in the application or in the income document, other than the bureau data, the anti-fraud application data, it's this alternative data which is coming together. On the business side, Shachindra spoke about GST. A lot of data being created online by retailers. Arindam spoke about you yourself as Paytm has a lot of data. So is there a way that we can actually marry the three and create a scorecard in such a way that real-time decisions are being made? And where there is no bureau data, there is no income data, there is no online data. Take, for example, my daughter, she's 20 years old. She's not there in anybody's footprint. There's psychometric solutions that we have come up with, which can actually solve for that problem. So overall, yes, NTC itself, if I look at people who didn't have footprints earlier, around the less than 50,000 ticket loan, around 26% are new to credit. And there are different ways that our colleagues in the financial industry are actually underwriting them. Once they come into the bureau, what we see very quickly, either a credit card being given or a higher loan being given. In fact, the less than 5,000 has grown because even in COVID, a lot of top-ups are happening to the same existing customer. So it's first time an NTC coming in, which could be just because of income, alternative data, and then very quickly the use of the bureau and the past payment goes into bigger loans. So that's what we are seeing.
Terrific. And I think, Navin, I am a consumer of your services at CRIF. I think there is a lot of richness in what bureaus have done, and especially your bureau. So that compliments to you. And I'm sure you and the bureau will continue to play a very pivotal role in building this business as we move forward. Now, coming to Harshit, last but not the least, Harshit, you obviously manage from an ABFL side, a lot of partnership. You closely work with some of the wallet companies or mobile phone companies, etc., and building partnerships to enable small ticket lending. Now, purely from a customer experience, right? Tell us from where you see how the business has evolved between so-called medium to high ticket lending versus small ticket micro lending. What is the role of UI, customer experience, and has that really changed, or just the ticket size has changed and the customer experience continues to be fairly poor? And if it has changed, what do you think will further change, or would you like to see to really make microlending become much larger than what it is today?
Sure. Firstly, Bhavesh, thanks for having me over, and thanks to Digital Money for having such a good panel. To answer your question, before I move on to that, I'll be mindful of one thing, which is I'll give minimum numbers from a ABFL standpoint because I know Navin is listening. To take that question, I would just take a step back, and I'm a big believer from a digital as a medium standpoint, right? I mean, how it can be a leveler for not just microcredit, but credit in general and for the larger digital lending per se. See, I think while we know in terms of the stakeholder, the consumer bit of it, the lender part of it, and the bureau or the underwriting which needs to happen, I think that has been fairly in place. And now if I look at digital as a medium, what it has done is while it has leveled and made sure the journeys end up being quicker and all of that, I think the main differentiator will continue to be the experience, because maybe 6 months down the line, all the people who are giving credit will have almost same level of sophistication in terms of finding out the bureau footprint, or for them to do KYC, video, non-video, different use cases around it. But what will be the differentiator is how the customer perceives when he's on that journey. And what we have tried doing, and if you look at the last 2 years, is we have tried to mimic the entire journey for the customer in a way it is more meaningful to them. So, say for example, if I look at the main 3 blocks from the consumer standpoint, in terms of the consumer getting onboarded, we servicing the customer throughout his tenure, and then helping him do the closure. So, if I look at these 3 pieces, how can I make sure that they don't end up being silos as they are? And if you see quite a lot of lending and even digital lending which happens nowadays, ends up being just in those 3 silos. So can I make sure that I intermingle some of these for customers to feel seamless across these 3 spaces or journeys which they are going to go through? So can I have a communication plan around it even while I'm servicing, so that at the time of closure it doesn't end up being a knee-jerk reaction in terms of the loan closing, or for them to do top-ups and things like that. So what we have been doing is we are trying to be a proponent from a customer advocacy standpoint, saying, hey, can we play the role from the other side of the table as being a consumer, saying what is it that is going to be meaningful? How is it that I can make the service more seamless? So that has been our entire focus, and that's the skeleton around which we have had different things and initiatives which we draw up. Now, if I look at the non-consumer part, which is the internal part of it, 2 essential things, right? The underwriting and my recovery. Here also, can I make sure that while I try and have different touch points and different channels for me to do underwriting and recovery, can I make it very, very pleasing and pleasant for the user, for him to give me more data, and secondly, for him to ensure that I can end up being a little bit proactive or provide a helping hand for him to make sure that he doesn't feel like I'm in a recovery mode. So those are some of the things which we are trying to kind of do a tightrope walk on, saying that can I leverage digital as a medium, and can I override this wave from experience as one of my key forte rather than providing lending. So that's one shift which we are trying to look at. And I think to the second part of your question, I think we all would be experiencing this across last 6 months to 9 months, that the demand side, and I think in India that's true, that demand side is never going to see a downside because there is so much underserved market. So how the differentiator we table onto the consumer is going to be something which we all will have to be mindful of. So I think that's going to be the main trick for all of us, where our focus should be.
Terrific. Now, this is actually you touched upon a great point, that user experience, not only in micro lending, across the board is changing dramatically.
Absolutely.
And consumers are so used to now looking at experience on Amazon or Flipkart or various other e-commerce sites, that when they come on the app or the browser of even NBFCs and digital lenders, their expectation of experience is similar.
Absolutely.
Right? Which has very low cognitive load, which is very, very customer experience focused. But I'm not very sure that a lot of people are really focusing on the lending side on that area. Hope that would change and we will see something dramatically happen. I know we are short on time, so I'll quickly get into some short answers from my panelists, if I may request them, maybe a minute and a half. And let me quickly again jump to Shachindra, Nath, to understand from you, while we've all spoken about the opportunity and some stuff that each one of us are doing in this area, but from where you see, and if you were to really forecast this for the next 2 years, what in your opinion would be the role of some of the initiative government is taking, like account aggregation, which will help us to underwrite credit better, or maybe GDPR, in whatever form data protection starts to come in, positive and negative, and even technology in general, right? Which you believe we should do or will happen, which can really quadruple or maybe increase this entire opportunity significantly. And if I may request, maybe a minute and a half, so that we can kind of cover all the panelists, because we've got a very short time. Apologies for that.
Absolutely. No problem. That's fine. So I would define it this way. Think of payments as pre-UPI and post-UPI era, right? And one single stroke of what UPI did to the payment is, I think, what OCEN would do to microcredit in India. And the reason I say so, back today, what is happening is that each of the lender, in their own good wisdom, try to look at different set of data. Navin talked about alternative data. I talked about GST. People talk about conventional credit underwriting data. But at least the availability of data itself on a homogeneous basis is a massive challenge. Once you have a layer of a digitized technology through which different lenders can pull a uniform data set, then it is up to them that how they use the data and underwrite the credit. So I think so that this is what I call UPI movement for credit underwriting for micro lending. And the way whether it is account aggregation on where what is happening on Gem Sahai and other, once a lender would because we know microcredit doesn't have the conventional things of balance sheet, tax, and other things, which means that there are only very few data point on which you can do the credit. But if that data point is not available to you, then it's a challenge. So I think so whether once account aggregation, and GST is now a service provider to account aggregation, once that happens, once the ecosystem, which is a lot of marketplaces, would start coming to this whole OCEN platform, I think so the democratization of credit is here to stay. It is very early days. But good thing is that right from policymaker, government, from organization like iSpirit, and also the market participant, because the early adoption of, account aggregation, or we are seeing that we have just integrated with Gem Sahai, and it was a, wonderful experience in terms of the how, digitized credit to a small vendor can go through the platform itself. Believe me, this would all change. But I would again say that if there is any small business as a lender, you have to be credit enabled, right? I'll give you one single example and I stop. When pandemic hit, we started doing 100% video KYC. 70% of our customer failed in doing video KYC because their mobile number were not linked to their Aadhaar. Right.
Yeah.
So that's the ground reality, right? But if you want to get credit in an efficient turnaround time, then you have to also do something at your end. And that's my appeal to all small businesses, that they should be credit enabled. If you can go onto your mobile and do everything else, then this also you should do that.
Yeah. No, that's terrific. And I couldn't agree more. And I just hope some of these developments of account aggregation or OCEN and many other things happen faster.
Yeah.
Faster, because they've been in the baking oven for, I don't know, maybe for a year and a half, and they should have come out by now. But I'm hopeful it should happen now. Arindam, let me understand from you, because as we said, that DMI is at the forefront of really enabling many such digital lending platforms, right, who are customer facing on B2C, to get micro lending, be it buy now pay later or durable financing or phone financing, etc. In your experience, what would you like to change, or what would you like to see as a change? Because I do, from where I come from, the entire KYC process, it's still not applicable to NBFC's eKYC. So people are doing CKYC or video KYC, etc. And as Shachindra said, yes, video KYC is not necessarily so convenient in our current state, or even NACH, registering a NACH document, etc., etc. There are fairly high number of impediments. So what would you be suggesting, that if somebody wants to scale the microlending business, how can we surpass these impediments, if you have some suggestions? And or what would you expect these impediments to be removed from the government of India or from the regulator?
Great. Thanks, Bhavesh. Expanding on what Sachin spoke about, the new age digital platform. Likewise, we are also extremely excited on the inflection points these digital platforms are bringing in, or potential to change the game. For example, we have been very, very closely associated with the Sehmati and the associated account aggregator piece. Why? Because we feel that, of course, you are right that it has been in the baking side of the oven for many years. In fact, more than now, it's been 2 years. It got delayed, but we are also not we are not losing hope about it. What it does, it brings in humongous amount of credibility on the exchange of information and availability of information, which otherwise makes it very onerous for us to complete certain journeys, especially, let's say, for example, we spoke about financial inclusion. Now it is easier said than done when we have to actually give a person a loan where we do not know where that person's income is coming from. Very difficult. We do not know how to complete the KYC. We do not know how to set up her or his standing instruction from the bank. Account aggregator to a large extent starts solving these, not only from connecting the FIPs, which are the banks, but the AMCs or the insurance companies, and hopefully telcos. We were in fact one of the panel discussion with the telcos, where the outgoing chairman of telco was encouraging telcos to participate in ACE. Now imagine the revolution it may bring in, because in LATAM, in certain parts of Africa, it has been proved that telco data is extremely valuable to discuss and decide microcredit to certain segments of the society, including the financial inclusion. So, that segment. Imagine today we do not have any visibility on utility bills. Nobody has built any platform to look at utility bills of yours or mine, right? Very difficult, because it's a state matter. We all have ours within our society. We are paying the electricity bill and all. But if anybody can aggregate that, hopefully account aggregator can, have that. So all these things will change the way we underwrite. And we personally at DMI, we have been always been focused on micro lending to the financially to the sector which is now excluded, but we want to get them. In fact, in the Diwali, we probably ended up doing about close to 52% of new to credit, which is unimaginable in a normal given situation. It's unimaginable, but we could do it because of certain of such data available from bureau. Actually, bureau could not give us on the NTC information, but telcos and alternate information, we could do it. So I think for us, it is very, very critical to solve that part. Fully not solved, we are not there, but hopefully in the next few quarters, we'll be there. The second part, which is very critical, is for lending to get completed in the loop, is setting up somebody's bank standing instruction. Today, we all are struggling on that. We do not have one-click, two-click services, although certain banks have come onto the e-mandate platform, but more than 27 banks are now participating in it. But it is not very easy to set it up. I am sure between government, NPCI, whom we are continuously trying to reach out as user group feedback, and we are giving them the feedback that these are the things which is breaking down. I think there is a lot of room to improve over there, which will help on the digital lending side.
Terrific. Picking up that point, Navin, from your perspective, now one of the key challenges of microlending, and if you could maybe spend a minute, because we just got maybe over 5 more minutes to go. What has been the role in your mind and evolution of bureau in becoming more alternative data enabled using machine learning at the bureau level, just not the repayment behavior? Do you think that's a reality wherein bureaus could be aggregating this information, just not account aggregators, wherein bureaus may be allowed to aggregate a lot of alternative data and use AI machine learning algorithms to maybe create a score, which is not just a score which is based on your historical behavior of making repayments, but also based on various other modes, which will expand the opportunity to underwrite credit for not just new to credit, but even for people who may not necessarily be eligible for credit because they may be currently be looked upon as over leverage, etc. Do you think that is going to happen? What's your status?
So Bhavesh, all credit bureaus are governed by the CRIF Act. The CRIF Act is very clear that there are specified users, and it is that data that is then used to create the credit report and the credit score. I think that will remain. I think this AA new, I would say, platform or a pipe that is being created can be used for data. But where the bureau can come in again is the experience in creating scorecards, helping host scorecards that can work differently with different data sets. Now, this data set could be, like Arindam said, telco data. It could be GST data. It could be marketplace online retail data. It could be various data, including psychometric data. Now, if we want to enrich that data, it is a scorecard that has to run differently to help underwriting and not, allowing things to come through the cracks, but actually saying, take the goods which you are actually declining. That was the most important thing. So I don't know if bureaus will aggregate such data, but I think the bureaus will help use scorecards that will, enrich further underwriting and bring in more financial inclusion. I think that's going to be the future. Also, it's important, like I said in my opening, other than this data, the fraud data, because it's all digital, everything is going to be digitally KYC. If it's going to be even a video KYC, if there are documents being submitted digitally, I think that again is where the bureau will play an important role. So that's what I think bureaus will do, help the overall ecosystem become stronger in financial inclusion.
Got it. Harshit, again, the last word from you, a minute. You've been working and you've seen various fintech players who are able to deliver phenomenal customer experience. But what generally has happened, the lenders have not been able to give that experience in their own native environment, right? The entire partnership model to enable micro lending, how do you see that evolve? And do you think it is currently at its optimum level, as you see between e-commerce and lenders, or wallet companies and lenders, or do you think there is more that can be done in this area, and you would expect that to happen in the next 1 or 2 years?
So Bhavesh, a short answer to your question is we have just got started. So if I were to look at the entire partnership model, and still I would say that all of us being two different parties in the partnership also look at this as a little bit of disjoint, and I think sooner or later that will have to change, because if we have to look at the entire data model, we have to work in cohesion, so to say, right? And from that standpoint, I think we have just gotten started. But if you look at a larger proposition, I think there is quite a lot of room for all of us to have a larger play. So if I look at even the guys on the other side where we tie up with, so while we end up being the lenders, there are players on the e-com side. There is so much intelligence which they are sitting on, which they mine only to a level. But if all of that intelligence can be, I'm sure can't be shared, but if at the intelligence level, if they can do some decisioning, and if that helps us to do some of the underwritings for some of our recovery models, for us to figure out better ways, I think we have won the game, because I don't think it can be anything else except a win-win for both these parties in the partnership. And I think all of us are, at least all of us stakeholders in this panel at least agree that the entire movement is happening more from either a B2B or a B2C to a larger B2B2C propositions, right? Because all of us feel that we are part of that larger conduit which the customer goes through in his entire journey or purchase cycle. And that's what I think is going to be the main killer thing for us to focus on.
Good. I think it's been short but interesting conversation with all the panelists. I would have loved to have more time, because this is a topic which we can spend multiple hours just on 45 minutes. But thank you, gentlemen, for your valuable comments. I'll just like to conclude by saying that from the way I see this piece, picking up from all the contribution that you have made and my own perspective, it's if India has to grow, and India will grow, consumption has to grow, and consumption has to grow, consumer credit has to grow. And consumer credit and microcredit within consumer credit is an area, if it does not grow, we will continue to struggle to make India grow. And it's in overall good interest for everybody that we should expand this base. And I just hope the regulatory environment, the risk appetite of lenders, and obviously the overall data protection and data dissemination infrastructure becomes more cohesive and robust, which hopefully in a year from now, we all could be discussing once again that the statistics that Navin was giving of 47%, the number should have grown furthermore by maybe double or quadruple. And we can genuinely see that instead of having 50 million credit cards, of which only 30 million are unique, we may have maybe about 100 million small credit, of which entire 100 million is unique. And I think that will be a time we can sit back and celebrate that India has done, digital lenders have done something material in micro lending and microcredit. But thank you for your time. Thank you for a wonderful conversation. I hope we meet again. Till then, thank you very much. Over back to the digital money team.
Thank you.
I would
Thank
like
you.
to all the speakers for this interesting conversation. It was an absolute pleasure to listen to you. Thank you for our attendees and our sponsors for supporting the event. Thank you. Stay
Thank you
tuned.
so much,
Thank you,
everyone.
Bye bye.
Sure.
Cheers.
Bye.
Bye. Bye.
Bye.